Hello and welcome to the webinar for the Glenn Jones Group and Caldwell Banker Access Realty. This is webinar number 2 in our series. Today's topic is going to be the state of the Savannah real estate market. As you know, with the pandemic going on in our country and around the whole world, it's affected everything, including the real estate market. So we've assembled a group here today to talk about some of that. We are recording this webinar, so it will be available on the Glenn Jones Group YouTube channel. We will send a link out to everyone after that, later today or tomorrow on that, so you can go back and look into it. A couple of housekeeping things. Q&A box. If you have a question, just click there, and our group partner, Christine Estridge, is here to answer questions. Or she will give them to me and I will distribute them to the appropriate panel members. So please, if you're, we'll get them answered either directly back in the box to you or in the group chat here. This is going to be a panel discussion forum today. So I'm going to ask questions of each of our experts and kind of guide them through the process of sharing this information with you today. My name is Brian Burge. I'm the realtor and a group administrator for the Glenn Jones Group. With us today, we have Glenn Jones, who is a realtor and an expert on the market here in Savannah. He's going to be talking about the conditions we're experiencing and market trends. We're also excited to have Preston Laird, who is with Colony Bank here in Savannah, a mortgage broker and a lending expert. He'll take good care of us and answer a lot of questions about some things that are going on in relation to the pandemic that need to be put out there for the public to kind of understand. Representing our buyer side of things, we have Julie Horton, one of our realtors in the Glenn Jones Group. And then we also, from a seller's specialist perspective, we have Glenn Jones Group and Caldwell Banker Access Realty. Also, I want to mention too, if you take a minute and visit our website, homesofgreatersavannah.com. It's at the bottom of the screen. We have a lot of great information on there. We have a blog that our realtors contribute to regularly. We have a community events calendar on there. We have links to our social media, lots of real estate tools and topics. So please take a few minutes and visit at homesofgreatersavannah.com. We do have Twitter, Facebook, and a YouTube channel. You can link all of them. So without further ado, we're going to get started here. Glenn, 2020 has been a challenging year for the economy due to the COVID-19 pandemic. How has it affected the housing market in the Savannah area?
Well, I got some information I want to share, Brian, and a lot of the information is coming from an article written by Jeff Andrews, a journalist that shared about the real estate industry. Everybody knows that the last 3 months time for everyone, but there's been some misconception about the housing market over the last 3 months. I guess more than 38 million Americans have lost their jobs since this COVID-19 debacle. Stay-at-home orders have pushed much of the economy into a halt. And many of our investors and opportunistic people were hoping for a silver lining to all this chaos, but they've been disappointed. The people hoping to scoop up homes at a deflated in there. So I guess you'd say, why hasn't the housing market crashed with much of the economy? And it's a simple answer. It's a relationship of simply supply and demand. You see, after the outbreak of the pandemic, housing demands fell as buyers lost their jobs, part of their income, or they just couldn't justify, going out and shopping for a house in the midst of what was going on with the economy and the job market. So, with that saying, usually when you drop in demand, and it would put a downward spiral on the prices. But the normal scenario of home sellers competing for the limited home buyers would drop prices. But the pandemic also caused the home seller to pull out of the market for the same reason that the buyer stopped looking. So while supply and demand both have dropped, the relationship between the two pretty much went unchanged, Brian. Meaning that the percentage or the proportion stayed relative to each other. House sales pretty much have dropped a little bit over the pandemic, but when the demand didn't take an upward climb, there's no reason for the prices to change. So together, this leaves prices virtually the same, since there wasn't a big sway one way or the other regarding supply or demand. But with that being said, Brian, there's no precedent said the guidelines are tighter. There's no need to have non-qualifiers flooding the market, which could cause some problems. So, it really has not affected our area a lot, really. Now, with that being said, credit scores mean a lot more than ever before. But on the board, you see here the real estate Savannah market compared from May 23rd of 2020 this year back to 2017. And, it's basically consists of 77 neighborhoods. There's this year, there's 2,002 homes for sale. Back in 2017, there was 235,000 for sale. So, that's a drop in 35,000 homes that are for sale. The median listing price per square foot today is $134. In 2017, it was $111 a square foot. And then the median house that was sold was $193,000. It's $233,000 now. So there's a huge difference in the availability, not necessarily what's moving and what's not. So relatively speaking, hadn't been that big of a dramatic impact on Savannah.
That's good. Julie and Sonny, I'd just be interested to ask you guys, what's the mood of the buyers and sellers in the market now with this going on? Do you see, Julie, what about you first?
So right now, what I'm seeing with the buyers is a little bit of anxiousness as far as safety goes, but beyond that, they are very hungry. They're a little more aggressive than normal as far as being ready to make an offer.
Okay. Sonny, what about from a seller's perspective? What are you seeing with your listings?
What I'm seeing from sellers are they're cautious. I get a lot of questions as, is this a good time to live? People doing, or people out looking at houses? But I also see that the inventory is low. So I have sellers that are slowly but surely coming into the market. But I think they're still optimistically cautious about putting their house on the market and it's sitting for a period of time. So they have a lot of questions. I encourage them, and if you take counties like Effingham County and Bryan County and the outlying areas, the sellers out there are still performing very well. They're still listening. I think here in Savannah, we have slowed a little bit, and also out in the higher price points, like at the landings, those people are different categories. I think that they are a little bit slower on listing their houses at this point.
Glenn, how does that tie in? Are some areas being affected? Sonny mentioned Effingham and Richmond Hill. Are you seeing that in the numbers too when you're looking at like different areas?
Yeah, for the most part, the Savannah areas are the same or maybe a little bit better. Like in Richmond Hill is how many months it takes for every house in that market to turn or sell. Richmond Hill has actually gone from 9.2 months down to 7 months. Effingham sales are really, like Sonny said, are really skyrocketing. They're doing really well. The price is holding up there. They're turning at a quicker rate. I think they virtually haven't seen anything. Downtown's been affected by the fact that downtown is heavily affected, and because they have halted classes, that takes a good portion of the people out from the downtown area. So you're seeing that being affected. But there's only a couple of areas I think that are hard hit in the area. One would be like Coffee Bluff. In March, it would take 2.6 months to sell the inventory in that area. Now it's up to 11. And in Dutch Island, in February, it took 7 months, and now it's 22 months this past month. So, it's pretty much a cautious market, but it hadn't been a terrible market. I mean, it could have been a lot worse. It's certainly not compared to what we went through years ago.
Sure, good. We're lucky today to have a real mortgage expert in Savannah with us, and now Preston, I want to get into that. I'm hearing from a lot of talk in the business that a lot of products are drying up out there, that the lenders aren't have taken some products off the board. Can you kind of explain what that means and what that means to buyers and how it's affecting them?
Yeah, absolutely. So what you're pointing out there, the products that are kind of being pulled off the shelf are the products that run the largest amount of risk. So if you've got a business owner that, has really good cash flows in and out, so they're showing a lot of really good money in some checking accounts, but maybe they're taking advantage of all that Uncle Sam allows them to and writing most of that off on their tax return, somebody like that would be an excellent qualifier for somebody for a bank statement loan program. But again, that's a non-mortgage, kind of a non-conforming type loan. Those have been pulled off the shelves just because of the amount of risk that those loans bring. So right now, in terms of uncertainty, everybody's looking at kind of averting risk. So you're seeing some of those products being pulled off the shelf, the bank statement loans. We had a loan where we could do, if someone had had no credit score at all, I could go out and get 12 months of bills from a cable company, 12 months of bills from a cell phone company, and, a letter from the landlord that says that they've been performing, set a credit report for, and put them in a loan with no credit score. Those products have been pulled off the shelf. So things like that, those are the ones that you're seeing investors pulling, are the products that come with the most risk.
So if I'm hearing you correctly, it goes back to always, as it seems like your traditional mortgage, with your history of your bills, your credit score is very important. Those things aren't being affected as some of these outliers that are being affected.
It's the stuff that, is if you want to deem it specialty, those are the ones that are kind of taking the hardest hit. The jumbo arena has taken a big hit. I think recently we've seen the jumbo environment kind of relax a little bit, where they were doing 10% down on jumbo loans. Now they're really kind of pulling that back, and they're only doing 20% down on the jumbo loans. You mentioned credit scores. Credit score requirements are going up across the board, and mostly in these FHA loan, your USDA. So USDA and FHA are the two that have really increased score requirements over the last, probably 90 days. So it's getting more difficult to get an FHA loan or a USDA loan. And on top of that, one of the other things that's kind of, running a little bit of an issue is the PMI companies. So, most of the loans, I'd say 95% of the time, I do a 5% down conventional loan. I think it's a very popular loan. It's not a lot of down loans have to be insured with PMI. And obviously for the buyers out there that aren't familiar, PMI is the insurance premium that you pay when you don't put 20% down on a home. And not a lot of people have the assets these days to put 20% down. So, I think we're running into the PMI companies wanting to kind of stay out and avoid some risk. So some of their loans that we normally do 5% down with no problem, we're running into finding a PMI company that will insure that loan. So that's just another thing that the issues that we're seeing, your lower down payment programs with getting the insurance on the PMI side, your jumbo arena is getting more difficult to lend in, and then you're seeing higher credit score requirements across the board on a lot of your government insured VA, USDA, FHA stuff.
I did have a question too, Preston. I wanted to follow back because I don't know if a lot of people know what a jumbo loan is. And I know that you said they're being a little more stickler with it. Can you explain what a jumbo loan is to some of those that may not know what
that's
that
a
means?
great question. So a loan amount of $510,400 and up. So if you're buying a, $550,000 house, you put $50,000 down, your loan amount's $500,000. You're in what we call the conforming loan limit. So that's a normal conventional loan. If you're buying a $750,000 house and you put $100,000 down and your loan amount's $650,000, you're in the jumbo category. So it's the higher priced loans that fit into that 100 is what we consider a jumbo today.
Okay, great. So we hear it a lot too, Preston. I want to dive into this too. It's always a topic when you're buying a home, and I think it kind of goes understated. You mentioned the PMI because that does affect the payment on your house, and it's a big part of your ratios and getting approved. I know that, and your final payment. The other part of that is interest rates. Everybody always seems historically low for a year ago. Can you talk about where we are with interest rates and how that can affect somebody's ability to be approved these days or make a purchase or their purchasing power?
Yeah, absolutely. I mean, I know we have uncertainty in our economic environment. So I know we've got buyers and sellers that are a little nervous. If you're one of those that just says, hey, look, I want to find a great deal. I think they're out there. I'm moving. I'm getting transferred to work. I got to buy a house. Now is a great time to do that. And a great time to refinance too. Interest rates that we haven't seen in a long time. And just to give you an example, like Glenn pointed out earlier, credit score is such a big driver in that interest rate, and credit score is such a big driver right now in your qualifications. We mentioned higher credit score requirements, but if you've got a 640 credit score and you're just on the qualifying side, your rate's probably going to be somewhere around 4.25 maybe. But if you have a 750 or a 7 score, these rates around 3%. I quoted a 2.99 and a 2.875 with one origination yesterday. So we're really seeing some awesome interest rates. You're at probably 3.75, 3.25 on a refinance. But again, these are with really good credit scores. You don't have to put a bunch of money down. That's not the main driver here. It's that credit score. So, you could put 5 or 10% down, have a 785 credit score, and get an interest rate. Awesome.
That's great. Yeah, it really does. Same thing with the refis. We're seeing the same amounts with the credit scores on refis. You and I talked the other day, and people always say, "Oh, there's a rule of thumb: if you can't lower your interest rate by a point, that you probably shouldn't do it from where your current is, because of the cost to offset origination, that sort of thing." I don't necessarily adhere to that because I think there's a lot of factors that go into it. Can you talk a little bit about that too?
Yeah, there's a bunch
refining and whether it's right.
There's a bunch of different factors that roll into that, I think number one, no matter how much you're saving or no matter how much you're shaving off that interest rate, it's got to make sense to you as the homeowner and as the borrower. And I think you can just ask yourself a couple of different questions. And first and foremost, when I'm talking to somebody about a refinance, I'm asking them what are your plans for this house? If you're 25 and you just bought this house a year ago, the likelihood you're going to be here in another 5 years is not. No, don't spend the $5,000 to do a refinance because you're not going to make that back up in the 36 months that you're going to live in that house. But, if you're someone who said, hey, look, we just, we got a growing family. I just upgraded my house. I'm going to live here for 10 years. Even if and it all depends on too, Brian, the loan amount. If your loan amount's $100,000, half a point's not going to make a very big difference. But if you're in that jumbo category, you got a $500,000 loan amount, a half a point's going to make a couple $100 a month difference. So, it's an scenario. And it,
also, too, one of those would be, Preston, wouldn't it be if your credit maybe was not as great when you first bought the house and you had a much better credit score now, being there a year or two?
Absolutely, especially a year ago. So if someone bought a year ago where rates were and maybe you didn't have the greatest credit score, you're probably going to be 4.625, 4.75, somewhere around there. And if you've gotten your credit score in the 750 range, you're going to drop a point and a half, and that is going to be significant savings. And negotiation in that house. And so you may have been at 95% on your LTV and paying a higher PMI percentage. Well, now the appraiser goes back out and appraises your house and you're at 90% on your LTV. So you lowered your PMI as well. So it just makes a lot of sense for us to have an initial conversation, get some questions answered on what your plans are, and then just run some scenarios. It doesn't take very long to put some numbers together and see if that's something that's going to make sense for your family long term.
A mortgage professional, because, and we work with 3 great ones here at the Glenn Jones Group. If you visit our website, homesofgreatersavannah.com, you can find all 3 of them. Of course, Preston's one of them, and we have 2 others that we work with. Not showing any favorites or anything, but you know.
All right. No. We can't do that. But I'm the best.
Yeah, Preston did do my house last year, so I will say that.
There you
But
go.
so Sonny, let me ask you a question. When you're pricing a house now, because I know you do a lot of listings, Glenn talked about the shortage of supply in the market. Are you factoring that into your pricing with your clients as far as this?
And that is kind of, I do neighborhood specific with that, and also location. But if you got a neighborhood, and I'll give you an example. I went out Saturday and was out at the Cove where they got the townhomes. You look back in the history, doing your market analysis and such, and there's been nothing out there that has sold. This is a 1,700 square foot unit. Nothing in over 6 months that's sold out there comparable to this unit out there. My advice to my seller was, we were going to go to the top of the market. We were going to push the envelope a little bit, and I see, when talking to my sellers, I know that buyers, and representing some buyers, that they're wanting to move into places and not really have to do anything. So to get the most bang for your buck, cosmetic things, I encourage my sellers, if it needs some fresh paint, something to do with some flooring, something they're going to get their money back out of, and we can push that envelope a little bit and raise those prices. I'm starting to see some specifically VA appraisers are starting to kind of push back on some of the values that are out there as well. So out there at the Cove, yes, I'm encouraging it. When you get out like Belmont Glen, I was on a listing appointment there yesterday. They got 22 houses under contract, and there was only 6 available in that price point. So I'm telling my sellers there, yes, we're going to go up. We're going to push the envelope even more there as well.
Glenn's part of that Effingham that's on fire right now. So we know they're this weekend showing houses myself. So I think Sonny touched on a good point. Is all of us as realtors will tell you, if you're going to sell your house and you want top dollar, make your house look like top dollar. And we're actually kind of ties in our next webinar we're going to do on June the 12th is selling your home in a seller's market. And we'll post a date and time on that, but I think there'll be some really great information in there about that. So we'll look forward to that. Before we wrap up here, we have a few minutes left, and there's one important topic that I want to go back to Preston on and talk about. It's a subject that's come up that I had never heard. The forbearance, and it's got a lot of you've heard a lot about it in recent days on the news and things like that, and it's kind of a slippery slope from what I understand. Preston, can you kind of talk about that a little bit and kind of explain it? Forbearance.
Yeah, absolutely, and thanks for bringing that up. So basically, what a forbearance is, it is a loan servicer, and I think you've heard the term forbearance, probably a lot more as it relates to student loans. And we haven't really heard it much around the mortgage side, but basically payments. And when the pandemic started, Fannie Mae and Freddie Mac are the 2 mortgage giants. So most of your conventional loans are going to be owned by Fannie or Freddie, and they kind of set the guidelines. And so what Fannie and Freddie said is, hey, if you've been affected in any way, we're going to make it very easy for you to let us know that you've had trouble, whether it's a very temporary hardship or something that maybe is more long-term. But you can put your payments on pause by letting us know this and your credit. So there is part truth to that. Now, if you put your payments on forbearance, it will not lower your credit score. So it does not hurt your credit at all. But this forbearance does show up on your trade line, meaning that line of, Fannie Mae mortgage on your credit report. It will show currently in forbearance. And how they initially rolled this out on the backside was if anyone stated put their loan on forbearance, it was basically going to show up as like some form of a short sale. So they were not going to be able to refinance or purchase another home in a 12-month period of time. So I think once that wave of information came out after they advertised how easy it was and how it's not going to affect your credit, now they're going, wait a minute, this actually is really going to negatively impact a lot of people, and it just wasn't rolled out the right way. What we're going to allow you to do is if you've put your current mortgage on forbearance, when you get your payments back and you've made 3 payments in a row on time and are now back in good standing, they will allow you to then move forward with some sort of purchase or refinance. So that's part one. Not a lot of people knew that there was going to be a waiting period on the backside of this forbearance. They just thought, hey, the government's doing me a favor. Thank you so much. I don't have to make a mortgage payment for 3 to 6 months. And I'm good. The other thing that I don't think a lot of people are realizing is that how this money that has been put on forbearance is going to affect them once it's back paying on a normal basis, right? So a 30-year mortgage loan has to pay out in 30 years. So I think a lot of the public thought, okay, well, if my mortgage payment is $1,000 a month and I go in forbearance for 3 months, the $3,000 is just going to be put on the back end of my mortgage year and 3-month mortgage. That can't be done. Now, some people can do that on an auto loan, but basically what this is going to come down to is this shows up, and everyone's had this in their life if they've ever owned a home, a big escrow shortage. So if you've ever gotten a letter from your loan servicer and says, hey, Mr. Homeowner, you have an escrow shortage of $1,500. So instead of your payment being $1,000 a month, now it's $1,200 a month to make up for this escrow shortage. So that's how these forbearance worked back into that loan somewhere within the 30 years, not on the back end. So I think if you had this pause of your mortgage payments because you were having issues with income, now you're back on your feet, you're making a payment, but oh wait, by the way, your payment's now $250 more a month to make up for the 3 months that you didn't pay. So I think those two things were 2 points that were not at all discussed on this forbearance issue.
Yeah, and I've even heard some horror stories too. And automatically got enrolled for it. It's one of those things you probably need to be really careful and ask the appropriate questions about before you go down that road. So
absolutely. And Colony Bank does not service any of our loans. We are a Fannie Mae, Freddie Mac lender, just like most people are. But when your loan then goes to somebody like Wells Fargo, who services loans, and you call and you ask that question, you're right. They're probably going to hit the button and put you on that. So I have not had to field a bunch of forbearance phone calls, but I have had ask these questions. So we've had to do a lot of digging on it, and we're really starting to find out there's a lot of negatives that were not brought to light when this first came out.
Julie, I have one more question for you, and I kind of talked about it with Sonny just a little bit. Sonny mentioned a great point about what buyers want to see, and he's telling his sellers, how did you see from your buyers?
Well, honestly, the buyer asking price if the house is move-in ready. Also, there was once upon a time we thought that the millennials weren't going to be buying houses, and that's not true. They're buying houses in droves, and their generation likes to see things ready to go. A lot of them are not handy, don't do a lot of fixer-uppers. So if you're a seller, you want to appeal to your buyers. You want to appeal to the millennials because they are buying like crazy right now. But it just makes your house more inviting, and they can see themselves in it a lot easier. Easier for them to make the offer and be willing to pay closer to the asking price.
Well, great. Well, we've come to the end of our time today, so I want to thank everybody. I think there's some great information in there, and I know I speak for myself as one of the agents, and Chris and Glenn and our partners and all of our other agents. You know, this is certainly not limited. Be glad to answer any questions anybody has. Feel free to call us in the future or check out our website. We'll answer your questions. We try to keep these at 30 minutes, just, you know, to respect everyone's time and get it. We'll have this available. So you can check that out. And also we have our next one coming up on June the 12th, and it's going to be on selling your home in a seller's market. Sounds easy, but there again, there's some money to be made and some things you can do. So we have some tips to help you. That'll be on Friday, June the 12th at 1 p.m. Thank you for coming, and we appreciate it, and have a great afternoon.
Thank y'all again.
Bye.
Bye.